We're 90 minutes into trading on Thursday, July 8th. Hello, traders. I wanted to try and get today's video out as soon as I possibly could. Yesterday's pick was ORCL. Video came out right about here, 2 hours into the open. Please go back and check the video from yesterday to make sure that I'm telling you the truth. You can see how the stock had a beautiful grind higher, and then it did close a little bit soft. Here is the tell. Let's say that yesterday you ended up buying the stock and you held on here and you thought, well, I'm going to hold this stock overnight. Today, you had a chance to get out even above yesterday's close. Well, what's so big about that, Pete? So what? That's not a huge winner. You need to put it into context. This is what the S&P 500 has done today. Down 60 points on the S&P 500, and the stock, you still had an opportunity to get out above yesterday's close. And you hear me harp about this time and time and time again. That is the edge that we enjoy when we trade relative strength. This system works. You had an opportunity, given the market bloodbath, to get out of this morning unscathed. That's very, very unusual. If you're on the wrong side of the market, you're typically going to lose money unless you're in the right stocks. So it's important to, number one, gauge the market accurately, assess the macro backdrop, get a feel for the conditions that you're dealing with, and then number two, find the right stock. Now, with regards to the market, I've been telling you this is a very low probability trading environment. This is not one where you want to be out spreading your wings. Light volume rallies, tight, tiny little bodied candles here indicate a lack of conviction on the part of buyers. You do not want to be chasing stocks at the all-time high. I've also been mentioning that everything looks great, it looks great, it looks great, and if you're not participating in this part of the rally, you look like a fool. And then all of a sudden you turn your screen on one day and wham, out of nowhere. What the heck? Where did that come from? S&P down 60 points, could be down 100 points today. All of the gains that you work so hard to make are very quickly and very easily stripped away. So that's why we need to be super cautious in this market. Let's talk a little bit about the market because we need to get our bearings here. So what's happening? Where can we possibly find support? We've got a couple of support levels that I'm watching right now. This is a horizontal resistance level right here, approximately SPY 425.50. That also happens to be where the 20-day moving average comes in. I believe that that will be the first line of support. We may not test it today. We may test it Monday or Tuesday. That support should hold. If by chance it doesn't, I would expect a very brief test of the 50-day moving average. You can see how every time we've touched the 50-day moving average, we've been able to bounce off of it. Earnings season is coming up in about a week or so. That typically attracts buyers, so I believe that any sell-off will be pretty brief initially. Here's why the market's selling off. I mentioned to you yesterday, FXI. Let's take a look at that. That is China's index for the largest 25 stocks. Look, it just broke major horizontal support. It is in bear market territory. Why is China's market in bear market territory if they have a 10-month head start on the economic pandemic recovery? Doesn't make sense. We also know that the PBOC, People's Bank of China, is considering easing. Why are they considering easing? Isn't their economy supposed to be gangbusters because of all this pent-up demand? That's another warning sign. We know that gaming revenues in Macau were down 73% in June compared to 2019. Why is that happening? 2019 was pre-pandemic levels. Why are gaming revenues down 73% if China's economy is back on track gangbuster? Doesn't make sense. I referenced all of these things yesterday in my video. Please go back, confirm it. Watch the video. TLT. Why is it moving higher like this? The Fed has told us that the inflation projections that they had were too conservative. They raised their inflation projections by a full percentage point. Typically, bonds would not like that news, and you would see interest rates move higher and bonds move lower. Plus, the Fed moved its tightening window forward to the end of 2023. Why is the bond market rallying on this news? When things don't make sense, it is a red flag that you need to respect, and it means that you need to be cautious with your trading. Yes, interest rates are near 0%, ton of money on the sidelines. 83 billion finds its way into the market in the month of June. A lot of cash moving into the market. That's why we've had this rally. And investors are forced to be in equities because bond yields are so tiny. They don't even keep up with inflation. So you have negative real returns. However, some of that money is going to get flushed out of the market, and that's what's happening right now. I believe we're going to see some additional selling. I believe that 50-day moving average, if we get close to it, will present an opportunity ahead of earnings season, but I would be cautious. I don't like what I see in China. Big red flags to me. This is the second largest economy in the world. This has been the global growth engine for the last 2 decades. We need to watch very closely. Hyper growth masks inefficiency and it masks excess capacity. China could actually have some credit concerns as well. We'll see. There was a finance minister in China that said that he is seeing bubbles in many different areas. Usually, you don't hear China speak of bubbles. So, some red flags out there. We need to be very, very cautious. One of these dips down to the 50-day moving average is going to fail, and then we will be down to the 100-day moving average. And that comes into play all the way down at this support level right here. Tread cautiously. Let's see if we can find some trades. Hey, bullish explosion alert for Piton. Let's take a look at that. Bouncing off the 200-day moving average, possible bullish flag formation, decent strength in here, some horizontal resistance. This is not the type of bullish explosion alert that I'm watching for. When I see these, I want a 5-minute candle, only a 5-minute candle, which would be part of this green candle. I want to see it all the way up here, closing on its high on massive volume. If I get that type of bullish explosion alert, it means there's pending news. Everyone else is still trying to disseminate the news. We're on those trades as fast as possible. So this is just kind of a big volume bar right here. Started to get through the high of the day, but you can see how it's pulled back. I do not like when more than half of this long green candle is given up. That to me is a sign that this was just a one-off volume spike. Institutions often do crosses. You've got a buyer and a seller. They meet in the marketplace. Huge volume spike, but it's meaningless. When we see these volume spikes, we want to see 1, 2, 3, 4, 5, 6 big volume bars in a row. That is sustained volume. We want to see it up near the high of the candle, holding that high, holding that high, holding that high until finally buyers have accumulated so much strength that you blow through and get the next leg higher. So we're not getting that in Piton. I don't like the chart. I don't like the downward sloping trend line. I don't like the daily chart. There's not much that I like about it. It's nice that there's some buyers coming in, but I would not be trading this. Let's get back to the market. What do I see happening in the market? This is nice. I'd mentioned in my pre-open market comments that this is going to be a bottoming process. In this video, the description section, you can see a link to my Twitter feed. You can get my pre-market comments every day. And one of the scenarios, the most likely scenario that I painted this morning was market's going to make a low. It's going to spend time on that low. Eventually, it may take a couple of hours, but eventually the market will break out and start to fill in some of the gap. But much of the gap today will be unfilled. What the market wants to do is it wants to confirm support. And so if we spend time and this low of the day holds throughout the course of the day, then we probably will see a little bit of a bounce tomorrow. So this is something that we want to watch for. We have the 10P indicator getting pretty elevated up here. I'd love to see it roll over and get a bullish cross, I don't know that we're going to get it. To me, these are a lot of long green candles off of the low. So you establish the low, look at that bounce. That is going to keep short sellers at bay. Now we retrace, test the low again, and a long green candle again, a big bullish engulfing candle. These are two key bars, and they are key because if you had intense, heavy selling pressure, you would never be able to get a long green candle like that. And the reason for it is that institutions have their orders layered out here so that when it starts to get going, wham, 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 wham. They are hitting every bid because they aggressively want to get out. When you get a long green candle like that, it means that those sell orders are not layered out there and that the sellers are not that aggressive. They are more passive. And that's why you get those releases. If you are a short seller, you're going to be scared to death trying to short down here because of that. You instantly have that trade fly in your face. So look for a nice little breakout while we're doing the video here. We'll get into the gap and we'll start to fill in some of this gap. I do feel that longer term, we need to keep an eye on China. We need to see what's going on there. Earnings season is coming up, so this is probably going to be a 2 or 3 day little test of support, and then we'll have a chance to grind higher into earnings season. That's my projection. Now let's take a look at my pick of the day. I already showed you yesterday's pick. Today's pick is MRNA. I don't like the daily chart so much, but I do like the 5-minute chart a lot. These long green candles instantly reversed this morning on massive, massive volume. The volume is starting to wane, but the stock has been able to hold all of the gains so far in a very weak market. That tells me that buyers are lining up. When we do finally get this move into the gap on the S&P 500, we should start to see MRNA poke through this resistance and move higher. So let's go into the 30-minute chart. And there you can see if I draw a downward sloping trend line right here, I'm going to try and connect as many points as I possibly can. These points right here give me a pretty nice trend line. So let's click on that. Click here, can click here. I want to know when that trend line is broken to the upside. That will tell me that it may be time to consider taking a long position, especially if the stock, especially if the market is able to get in to the gap here. Let's go into a 5-minute chart. We can also set some alerts right here. Just going to use a daily alert, going to click on this bar, and we'll see if that gets triggered today. We'll also put one at the high of the day right here. And now I have multiple alerts. We can continue to look for other trades, and we can wait for that alert. I'm not going to go on the short side right now, but I will tell you if I went into heavy selling, you can see anything Chinese, Alibaba, short it. Baidu, short it. Come down the list. I did see another one that actually looked like a pretty decent short. It was CRM was in the list. JD is another Chinese company, but you can see Alibaba, they postponed an IPO on one of their subsidiaries, and you can see that the drop below horizontal support, very, very bearish price action. Baidu also very, very bearish, breaking that horizontal support level. Chinese government is starting to regulate the internet businesses. And BILI is another Chinese company. You can see that breakdown. There's a upward sloping trend line. Major moving averages breached to the downside. Also very weak. CRM was another stock. And this is a breakout right here. You can see this is a very bearish candle. Big gap reversal. Stock gaps up, spends the whole day selling off. Then today you have follow through selling, and you've got it below the 20-day moving average, and this is what I consider to be a failed breakout. So we should see some follow through on the downside. Shorting, you can short on a intraday basis, but not on a swing basis because the market still has a very, very strong bid. So you don't want to be out there trying to pick a market top. So let's continue to look and let's see what we can find. We're going to go into Pop Bull. I probably won't find any stocks there. And we're going to go into Pop Plus Bull. These stocks were on Pop Bull yesterday. I'm going to look for stocks that are up today. MRNA, my favorite. SPCE, that is a big bullish engulfing candle. Downward sloping trend line. Could be a bullish flag formation in here. Yeah, SPCE looks pretty good. Did you see how easy this was to find? COST was another stock that I highlighted yesterday. You can see that it really took off. Nice looking, strong stock. SAVA. There is no stop to this stock right now. Let's take a look at that. Through the prior day's high, look at that strength. It's been able to recover even in a weak market, and now it's trying to punch through that horizontal resistance. That was my Pop Plus Bull search. Let's go into relative strength 30. Let's see what we've got there. NVAX. Nice looking chart, orange line above zero. We'll put up the SPY so that you can see the relative strength. Market down huge, stock continuing to move higher. What do you think is going to happen when the SPY gets into this gap? It's going to be like throwing gasoline on these stocks. Whoosh, they're going to just race higher. So SPCE we also took a look at, SAVA, those are some of the favorites. SAVA, SPCE looks good. NVAX looks good right now. MRNA though, that is your bullish pick of the day. Set your alerts, wait for the market to get into the gap, wait for the stock to get above this resistance level. That's where you'd want to enter the trade. Be prudent, take gains along the way. Don't expect a full gap recovery today. We may ease into the gap, but I don't think we're going to recover a whole lot of it on a longer term basis. Support is at that 425.50 level right in there, your 20-day moving average. And below that, it is the 50-day moving average. Going to be taking some time off. Good luck with your trading. We'll see you Monday. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.